Hey guys, welcome to FX Chronicles. This is Azam, and today it is Monday, May 11th, 2015. And what I'm going to go over in this really quick short session is a trade we took last evening during the Aussie session and the Euro session on the pound Kiwi. We were deciding to go long, and just right now this trade closed, and I just want to touch bases on what happened and why did I take it in the first place. Planning to short it, and it stopped us out. So before getting started, just a quick risk disclaimer that again, Forex includes a lot of risk in it, and all this material provided is for educational purposes only, and that's pretty much it. Okay, now on to the charts. What happened here? Alright guys, we're looking at the pound Kiwi. I decided to take this short last night at about, honestly I took multiple positions on this and I really lost about 160 pips on this trade. About 2.09 is when we got in around here, around this level, and we got stopped out at about 160. So what happened? What made me want to go short on pound Kiwi? A few things to note. First of all, we will start off with the weekly charts. The weekly charts, we had this huge inverted hammer, or doji, in fact, kind of candlestick right here, and this was the high that it had reached previously, and that was at 2.1060, and then before getting there, it had reached in this region previously around January 2015. Now this high was built up September 2014. Okay, so about 9 months ago, and then it came back into these levels around January 20 or February 2015, February 14th, before it went down. When it went down, it got back up into this region, and last night when it was in this region, let me go into the daily charts and see what we're seeing. What we saw, let's go to a smaller time frame. About here, this is where we entered, was like, hey, there's potential opportunity here for it to go down. So this was a solely resistance level, support and resistance level based shorting trade, and I was kind of excited. I was looking forward to this trade. And the key is, regardless of what you trade or how you trade, whatever strategies that you're using, the most important aspect is always remember you can be wrong. So when you're wrong, how much are you willing to lose on that trade is of key essence here. And risk management comes into play on trades like these where you feel really strongly about hitting weekly support and resistance levels. I mean, look at this. Like, this is a resistance level that's been around since literally 2011 that just got broken. Okay, and I'm sure a lot of people got squeezed with this short, and that's fine. That's fine, because these kind of trades you will have to take, and you learn a lot more. Obviously, you could always look at the fact that the previous trend, the last few weeks, had been an uptrend, and that in and of itself gives you a hint that, hey, you know, there is a bias towards the pound being really strong. And of course, with the elections that happened last week, there was a lot more strength that the pound gained, and it's continued over into the US session here on Monday. So this happens, and that's fine. The key is always just risk management, regardless of how much money you have, whether you have $1,000 account or if you have a $1,150 account or like $100,000 account. And that's really all I can say about this trade, is that regardless of what happened, I would have still taken this trade. I would take this trade again, because that's what trading is. You take chances, you take risks, and you take calculated risks based on historical data, but sometimes you can be wrong, and that's fine. That's fine. You learn more, and you learn to respect the markets. You also learn to be more humbled by them in the process. Why? because where anyone could be very confident and eventually become arrogant in the sense that I'm better than the market, that I get the market always finds a way to humble you. So this is really the trade that I took. Broke weekly resistance, and that's pretty impressive in and of itself. And yeah, so I don't really have much to say about this trade. I don't feel bad for a loss. Of course, actually, I do feel bad. I mean, it sucks. I'm not gonna lie, because every trader wants to make money on every trade that they take. But this is a trade that kind of hammered me in a way, and it made me realize a few things, that even sometimes weekly support and resistance levels will not be respected by the market. So yeah, here it is, my flawed trade. I lost about 200 pips on this trade. If you put two positions, averaging them out, 226 pips, big deal, woohoo. It's only Monday. There's so many more trades to come. So always learn from your mistakes, always review them, and learn from this trade that, hey, we work on support and resistance. Most good traders have a strategy that they stick to, and sometimes you will have trades that just won't work, regardless of what your strategy is. And as long as you have at least a 60% win ratio, you will be profitable and you'll be very successful. So that's all I have here, guys. I had a quick session I wanted to do on pound kiwi loss that we've had today, and I hope you guys learned from this. If you have any questions, comments, please feel free to contact me at fxchronicles.com, and check us out on Instagram, Facebook, Twitter, FX Chronicles. Thank you so much. Once again, this is Azam. Have a great day. Bye.